What is up, everybody? Welcome back to this episode of Just in Minutes. It is that time of the month again to go over the monthly stats. They have been released from July, so let's jump right into them. We're going to start with, the residential activity table here. If you follow every month, you'll get to see the changes along with me. So let's look at some of the important numbers. Where are we? Draw here. So I always like to look at sales activity. This is the year over year. You can see that we're down about 40% in sales activity. So that is essentially a huge hit. We have almost half as many people purchasing homes this year compared to last year. So we're already starting to see that slow down. Obviously, if you're living under a rock, a lot of this is due to the high inflation and the continued increase in interest rates. Let's look on new listings. So new listings actually increased by 12.4%. So we always talked about supply and demand. We're actually seeing more supply now this year. So that increased supply with the decrease of the demand due to the interest rates is really what is affecting the average price. But with that said, the average price is still up 2% year over year. Now, historically, we've been spoiled in real estate. We're used to seeing these 30%, 25% increases year over year for the last few years. And that's just not what real estate was. Like when I first got in, if you got 3 to 5% a year increase, that was really good. That was the standard. So we're just a little bit below that. So even though you hear this doom and gloom, like people would love to throw around market's down 40%. It's not. Sales are down 40%, but prices are still up 2% as of now. As well, I want to go to the months of inventory. This is huge, 3.1. So it is official. We are in a balanced market in Canada. What this number essentially means is if every single listing on the market right now were to sell, how long it would take without new inventory coming up. So a balanced market is 3 to 5 months. A seller's market is under 3, buyer's market is over 5. So 3 to 5 is a balanced market. So we just tipped out of a seller's market into a balanced market, which is the first time we've been in this balanced market since before COVID, really. That was the last time we were in a somewhat balanced market. And then let's go average days on market. You can see has jumped significantly. We've added 5.8 days as the average days on market, which pretty much it's almost a week. So you are starting to see now things are sitting longer. I know I just listed a house and I looked in that area. It's in a more historic area in the St. Clair neighborhood. And the house is the average days on market there is 27. So we just have to adapt to the new market conditions we're in. This is my favorite chart. This is possibly just because it breaks down month over month. So some of the numbers that I want to go over here when we're talking month over month. Okay, so I got my pencil working here. So green being the new listings, purple being the number of sales. I guess what this really represents is the supply, which is the green, the new listings, and the demand, which is the purple. So you can see as supply and demand is green and purple, as they were closer together, prices were coming up. Now we have these really high supply levels in comparison, to the last 2 years, and we have very low demand because of the interest rate. So because supply was so high and the demand was so low, we started to see these prices come down. So in fact, just to go over some of those numbers, detached, so residentially, the average sale price month over month is down 7%. So I'm gonna try to draw 7%, it's down month over month. So from end of June to end of July, we're down about 7%. However, the overall price, as we saw, is still up 2%. So if we break it down more into detached, so that's that 7% drop here. If we break it more just detached, so detached went down 6.6 month over month, so from end of June to end of July. Towns went down 3.1, condos went up 2.8. Okay, the reason detached went down so much further, in my opinion, than towns and condos is because they're starting to now react differently. When things first started to go, condos, we had a high supply of condos. Condos took the biggest hit. I think in the first month when we see this drop here, condos took a double-digit drop in average sale price, whereas detached only went down like a couple percent. So now, because interest rates have gone up, people's qualifications have come down because of that, the only entry level pricing really is a condo or a townhouse. If you're, blessed with, dual income, two good incomes, you can get into that townhouse game, which is why townhouses kind of just steadily been going down. There's nothing really crazy fluctuating with them, but apartment style condos are basically increasing because now that is the popular price point that people can afford. So for them to go up 2.8%, and just to put that into comparison, condos are up 15% compared to this time last year. So if you purchased a condo last year, you made 15%. That's a huge jump compared when the average we're up is 2%. To be up 15, that's pretty good. So condos are now making their comeback post-pandemic. People, I guess, want to live close together again, combined with the high interest rate, which causes affordability to come down. It's becoming a very hot property. Like I said, townhomes are cruising. Detached is taking the biggest hit. Why? Because we have such an influx of detached listings, and the price points, with the average price point over $1 million, detached homes are over $1 million. So because of that, we're just seeing so much inventory, and people aren't qualifying for those price points. Like, to carry now a mortgage over $1 million with, a 5% interest rate, it's a big monthly payment. So detached homes are really, really cooling off. However, with this said, one thing I want to point out, we talked about green bean supply, purple demand. You can see how big those gaps are there. If you notice this month, the listings really, really, really dropped. So this gap's getting smaller. The active listings dropped in comparison to the previous 4 months. So supply is going down. Demand has been going down steadily, but because this supply and demand is getting closer, I do think it's going to curb the price decreases. We had these drops. I don't think the drop will be as quick, or not as quick, as as big as we'd seen, because now we have, supply and demand is starting to even out there. And to put in perspective where the average price is right now, we are basically September, October pricing last year is where we're at. So I think, if you're looking for a comparable for your house, depending on your area, it might be worthwhile to see what things sold for in September or October to get an idea of, okay, this might be where we're listed at. So I think that's everything I want to say on that. Lastly, residential market activity. So we have the stats by neighborhood, by property style. I'm not going to go into detail on this. If you want more information, I'm going to attach all these in the email anyways that this video came in, so you can check them out. If you want more specific neighborhood data, let me know. I'd be very happy to share it with you. I apologize, this video has been a little long, but I felt like there needs some explaining to be done in it. Is what I see happening in this market, where I think it's going to go. Of course, we don't have a crystal ball, so who really knows? But thank you so much for tuning into this video, and I look forward to talking to you again next month.